Assalamu alaikum and hello, welcome to everybody joining us today. My name is Aisha. I am the chair and founder of Always Network. I know that people will be joining us as and when we're doing this presentation, but that's absolutely fine. We want to start on time. We want to finish on time as well. So we appreciate that you've taken this time out. So today's session is, let me just share my screen, is this: how to set up a community interest company. And we're super excited to do this event. We know that a lot of people have requested to know how to set it up. And so we thought, well, why not do an event around it? But before we get started with the event, just a little bit about Always Network. We are supporting grassroots charities working with the diverse Muslim communities, service users across the UK to become more fundable. And we primarily are working in this area because there isn't an organization who's doing that solely for Muslims in the UK. So we're here to support them. But of course, you know, the events that we're doing, we know that it will help a lot of charities or a lot of voluntary groups out there. So welcome for joining us today. We do various workshops, webinars, networking events, seminars. Recently, we did a Meet the Funders in Bradford, and where, as you guessed, charities get the chance to meet like a range of funders with their funding needs, and it was a fantastic event, and we're hoping to have another one in London. So if you are in London or you're able to come down to London, we are arranging a Meet the Funders event later this year as well. But this is our previous events that we've done. And I won't go through all of them, but we'd like to make sure that our events are based on the feedback that we get and aim towards helping you get those funds as well. We know that it's quite a competitive environment with grant makers, so it's always good to support the charities along the way with your journey, and that's what we're here to do with our events. Our upcoming webinar events in July is how Zakat can benefit your charities with NZF. So for those who are not familiar with the terminology Zakat, that means that it's one of the pillars of Islam. It's basically giving 2.5% of your annual income to charity. So it's the spirituality behind that is purifying your wealth. So we give money to charity, but in this sense, the focus will be how could we use those funds, or how can your charity use those funds to distribute with your to your service users if you meet the criteria. But there's a whole topic around that, and that's what NZF are there to do, to talk about it. So that will be happening, I believe, the first week of July. And the other event that we have with an organization called Easy Fundraising, they focus on how you can get unrestricted funding through retail shopping. So similar to Amazon, where you kind of use a specific link, you click on the link and then you do your regular shopping, and then some of that money goes to the charity. So again, they'll be there to explain that as well. You can always find these events at the link I've shared, eventbrite.co.uk, and you can always search us, Always Network. And then finally, we are here to help you in any way. And I didn't put up the info@.org.uk email address if you want to get in touch with us. We do have staff members who could support you with your queries and your funding needs. And also we're on social media as well. So that is that. And the housekeeping rules for today is generally we're going to keep the mics off. And at the moment, the spotlight will be on our presenter today, Mahmoud. But we encourage questions. If you have any questions along the way, do pop them in the chat box. And also talk to us, share who you are, what work you're doing, or where you come from in the country. We would always like to know that information. It's always good to network wherever we can. And this is a recorded session. Hopefully the slides will be sent to you afterwards as well, along with the recording. And there will be a Q&A session after the presentation as well. So, we'll make time for that. And yeah, so without further ado, I'm going to hand it over to Mahmoud, if Mahmoud can join us.
Aisha, for that. Good morning, everybody. There we go. Hopefully we've got sound. If everyone can just either put a yes or a no, just if they can hear me clearly enough. That's the first question of the day. Fantastic. Thank you, Sullivan. So, excellent. Perfect. Wonderful. So what I'm going to do, I'm going to share my screen here. And before we dive into what we're going to go through, there's just a few things I want everyone to be aware of, and I'll just give you an outline of who I am, if I could just get to grips with this bit of technology there as well. Fantastic, that's working. So a couple of things here. Now, this is a session that's designed for everybody who's turned up, so thank you very much for giving me your time. So if you have a question that pops into your head, put it into the chat box. And what I tend to do is I'll get to a natural break in the presentation and I'll attempt to answer your question as we go along. If there's something that's more involved in that question here, then it may be I'll answer what I can at that stage, and then we can move it towards the end. And I've reserved about 15, 20 minutes towards the end, subject to how we get through this, about any sort of further questions. So please, there is no such thing, by the way, as a silly question, a small question. If it's relevant to what we've got going on here, then ask away. So I want this to be such that you feel at the end of it, you've got what you wanted when you've turned up for this presentation. Now, just in terms of a little bit of personal background about myself before we dive in to what we're doing today. I'm just a little personal background. I'm originally from London. I emigrated to Leicester about 40 plus years ago. I'm one of 9 children. I would say I'm the cutest one, the one smack bang in the middle. I've had 2 careers in my life. I used to be a teacher in a former life, left that because in the UK, if you teach, people think you can't do anything practical. I left that, nothing to go to, went into industry for 5.5 years, got various qualifications, of which accountancy is one of them. Left that after 5.5 years and thought, what should I do next? And 28 years ago, from my back bedroom, I formed a company. That company is now called I Hate Numbers, and I run Numbers Know How, which is a combination of accounting services to a variety of sectors, of which social enterprises are a big component of that. I also run courses, write books, various bits and bobs, anything to keep myself from getting bored and avoiding a proper job. Now, today's presentation is on community enterprise companies. So let's crack on, and then we'll get introduced to that itself. Let me share my screen. If it's of interest to anyone, by the way, there's a link on the last slide, by the way. So if you want to have a nosy and find out a little bit more about me, I'm not going to bore you to death with all of it now, then you're more than welcome to go out and have a look. Now, CICs are the basis of the conversation we're going to be having today. And what we're going to cover, I'm going to outline in a moment. And I put social enterprise model. So there are different ways that if you set up to deliver some good, deliver some services, to sell products here, there are a number of ways that you can structure yourselves. Social enterprise is a bit of a hybrid model here. It's not directly a charity model, and it's not directly a commercial model in its full there as well. A curiosity, by the way, how many people here are familiar or have come across the term social enterprise before? Fantastic. There's not going to be any school testing questions type here. Fantastic. Excellent. Now, Aisha, when we were speaking this morning here, she's got a question just to ask you, by the way, about CIC. So, Aisha, if you're okay just to launch that question, and I just want to get a flavour about the CICs at the moment. Good, I like that. Okay. So we've got 2 questions there. I'll leave it a minute or 2 just to filter through. Good to see that the first 2 have been answered positively. Fantastic. For those of you who've answered the question, brilliant. And then the second question was about how many of you here already have a CIC? What we do while those questions are being answered, minimize that, and let's just have a look at what we're going to cover today. So these are the 4 areas that we're going to be talking about as far as today is what's the purpose of a CIC? We're going to talk about the registration and the structure of a CIC. So for those of you who already got a CIC, excellent, great. Be interested to hear about your experiences. For those of you who haven't, I'll talk to you about the registration process. My experience is that such in the last, I would say probably the last 2 to 4 years, CICs are gaining more traction as business structures for organisations. They are still a relatively small percentage, by the way, of all the limited companies in the UK, but they are growing in number. But I'm seeing a lot more get rejected on application because they're not complying with initial registration requirements here. And I'm going to talk about that and what we can do to avoid that as well. Okay, Sarah, I'll pick that one up later on when we talk about the management side of a CIC. And Sarah's asking the question about the directors, and I'm going to talk to you about who you ask and the different types of directors that you can have within your organisation as well. So we're going to look at the registration instructor, and there are 2 types of CIC that you can have. One tends to be more popular, but there are still 2. Now, for me, having set up the CIC and running it, the running of it, the management of it, is really quite critical. So for those of you who may be going after funding to help you provide those services, provide what you're doing there, if you go for a funding bid here, the funder is more of interested in how you're structured, how you run the organisation, as opposed to the quality of the work that you're doing. The work quality is important here, but also for your own well-being, your own stress levels here. I just want to share some tips about how an organisation should be run for the betterment of yourselves and for the betterment of your users. My personal opinion, by the way, whether you're a CIC or an aspiring charity, you are a business. What you do with any money that you generate is different to perhaps a commercial organisation, but you're a business nevertheless. So don't let anybody tell you otherwise. We're going to talk about the social impact and how we can continue delivering that social impact. A bit of a sanity check. Is everybody comfortable so far, by the way, at the speed of which I'm delivering this? Is it going too quickly for anybody? Or is everybody reasonably happy? I'm not going to get embarrassed or upset if you say it's going too quickly. Fantastic, thank you, excellent. So again, I want to make sure we don't run away from this. So let's have a look at, first of all, the characteristics of a CIC. Let's get them all up. Now, first of all, it is a company. Now, what that means is, if you've got a CIC that's got 2 individuals who get together and say, look, we're really interested in delivering these services for our community, this group of people, this group of individuals, it could be a local area, it could be a national area, it might be just yourself, then it is a company. That means if, for example, you're holding an event and something happens at that event, somebody gets injured, somebody decides to be litigious and sue your organisation, it's the company that's responsible. You personally have no legal liability unless you're given a personal guarantee. If the company has financial problems and you can't afford to pay suppliers for whatever reason, maybe you've got a funding bid that they withdrew the funds at the last moment, but you've committed yourself to some funds, unless you've given a personal guarantee, it's that thing you created that's responsible, not just and therefore you don't have any personal responsibility. Abid, as far as the recording is concerned, my understanding is the recording's made. I'll leave it to Aisha to confirm that. So first of all, you've got a company that'll be done. Typically, by the way, the characteristics of the company, when it says CIC, that's the abridgment of LTD that you might see, or limited. So for anyone who's like a self-employed individual or sole trader, that is not a company. So first of all CICs are companies. Now, typically, they are non-charitable. Now, what that means is that if you generate any surpluses or profits, which I would always encourage, those profits and surpluses are not available for the individuals who run the organization. They're for the betterment of the organization itself. That's what we mean by non-charitable. And also, a CIC may eventually become a charity, but it is not actually a charity. So for anyone who's there after funding from a trust or a foundation, typically nowadays, trusts and foundations, certainly the majority of them, will not provide funding to a non-charity organisation. So you have to be a registered charity in order to access those funds. So remember, a CIC is not a charity organisation, but it's a very popular model, by the way, if you see yourself at some point in the future eventually becoming a charitable organisation. Now, the next thing, and this is part of the application process, by the way, you've got to have some benefit you're delivering to a defined part of the community. Now, the community could be very narrow. So, for example, we've heard from AWN about the sort of Muslim service organizations. That could be the community that they're delivering to. Doesn't have to be exclusive, but that's the primary focus. So again, that community can be defined locally. It can be defined nationally, but you've got to have some idea about who you're delivering your services to, and you can't just say it's for everybody. Everybody is not a community in that respect. And the social purpose is as follows. A social enterprise model typically is something that says you're doing some philanthropic good, so you're delivering some well-being, some improving people's lives, some sort of social good, but also you've got an entrepreneurial mindset as well that says you're not relying just on grant funding, you're not relying just on fundraising and donations, but you're doing other things outside of that arena, which generates income that's put into the pot to help you provide that social good, that social benefit. So we've heard from AWN, they're doing workshops. And again, that might be quite common that you deliver some services for which nobody's going to pay. You deliver some services for which your end customer will be paying for that. Of the CICs that we look after, there's quite a hybrid mixture. Some of them will be things like running events. Some will be running workshops. Some will be running training courses, which are more longevity. Some are, for example, going into publications, producing books, works that they're going to be selling on. But there's going to be a trading dimension to be truly classified as a social enterprise. Now, for me, I'm a big believer is that for those of you who aren't yet a CIC, I would strongly urge you to think before you decide, should I be a CIC? Should I be a shareholding company? Should I be a sole trader? Should I be a cooperative? Should I be a partnership? Should I be a limited by guarantee? There are so many choices available to us these days, is that think about the objectives first of all. So don't think, oh, I like the idea of a CIC and then try and fit your business into that model. It follows your objectives. So if, for example, you're seeing all your money coming in from donations, from trusts, foundations, it's got truly charitable benefits there, then you might decide that a charity model is more suitable. If you want to commercially benefit from what you're doing, which there's no harm in that, then you may decide that limited by guarantee or a shareholding company is more appropriate. So think about end objectives first before you decide to go down this route. Now, profits. Curiosity, by the way, for those of you who already got established organizations, do you envisage that your organizations will generate what I call a surplus? So the fees that you charge, the money that comes in, the cost of providing that service will be less, and you will end up with some degree of surplus or profits in your organizations. If you anticipate making or generating any surpluses, a simple yes would be great. If you don't, then obviously put an end there. Okay, excellent. Now, this is going to influence also the different types of CICs that you can actually have. If you anticipate doing something, you are going to be using your own funds, you're going to be generating profits, and you want to, as an individual, participate in that and actually draw some of that profit out and not through a conventional salary route, then again, the type of CIC, the type of company may influence that end choice. Now, other factors that also come on board is control. Now, if it's your baby, if it's your creation, you want to keep a control of what's going on. Bear in mind, depending on, again, how the funding comes in and the structures, a CIC gives you a degree of control, certainly does. How many directors you appoint eventually, the type of directors you appoint as well, will have an impact on the level of control that you have with that as well. Now, the last two things that influences the choice is funding. So if you, I'm going to talk in the second part of this session, by the way, about some what I call financial controls that I would always recommend, some financial approaches that I would recommend all organizations do. And one of those is doing a financial plan that says typically, what does my future look like financially, say at least I would say typically 12 months ahead. And depending on that, funding, where it comes in, may also influence the choice of structure that you have. And the last thing, by the way, that good old thing, tax. Now, can I just point out, by the way, the very fact of being a CIC does not in its own right make you exempt from HMRC taking a slice out of your profits if you do make some. As a general rule of thumb, if you generate no surpluses or profits, there won't be any company tax to pay. But if you do generate some, being a CIC in its own right does not negate you being taxable. A charity, certainly yes, because those funds are being used for that primary purpose, but a CIC is not necessarily a model that says the income that you generate is free from taxation. My experiences of most CICs, though, by the way, the tax burden tends to be quite minimal. And I would certainly say, don't let tax be the deciding factor behind your decisions. Tax, yes, it is a cost, but for most CICs, the very nature of what they're doing, the surpluses will be there. The tax slice won't be that significant, but it's still a cost to consider nevertheless. I hope that makes some degree of sense. But remember, being a CIC does not negate you from being subject to tax. Now, let's have a think about the registration side. Now, for some of you, this will be academic because you'll have gone through the process already. Right, so let's have a think about the registration. Now, Companies House is the repository. So when you get to the end of your financial year, I'll mention this later on, by the way, there will be a requirement to submit documentation to Companies House. There are two ways of transmitting that information, but there is a separate regulator that looks after community interest companies. They do link to Companies House. Companies House is the overall regulator, but there is a sub-branch, a separate community interest regulator who is responsible for CICs. Now, this is as part of the registration process, but also impacts on the reporting requirements. Now, if you are not yet in that process of registering and making an application to become a CIC, so you have to make an application, then there are two key questions that you need to address. Number one is, who is the community that you're providing these activities for, and how is your community going to benefit? My experience has been such that some people are quite general in there, and they're very enthusiastic. They think their organization is for everybody, which it clearly can't be. So you need to be think very clearly descriptive about who that community actually is and how are they going to benefit. The second aspect that comes from that is the activities that you're going to provide to show what's the activities you're going to put on, what actually are they? Are they workshops? And if they're workshops, just explain and articulate how that community will benefit from those workshops. And I have seen applications not succeed, by the way, because people are too general to say, these are the activities, they're very general, but the regulator can't clearly see about how those communities will benefit from those workshops. So make it obvious for them, and then your application is going to be more successful, more likely to get through first time. At the end of the year, each year, by the way, apart from submitting your accounts to the regulator, you have to also submit a community interest report. It's called, if you want to be official, it's called a CIC 34 report. And that basically says, this is what we've done over the last 12 months or whatever time period you're looking at. These are the activities that we've carried out. And by the way, also, we've consulted with the stakeholders. This is what we've done, you know, whether it's by emails, meetings, and all the rest of it. And those two elements are critical. You don't have to write War and Peace. They're not copious amounts of documents, but the regulator wants to see what you've done and how you've actually carried on consulting with stakeholders and what your engagement levels have actually been like. Obviously, there is a fee as well, by the way, and Companies House will charge you £15 for the submission of the documents and the CIC report. M&A is your memorandum and articles. Every CIC will have effectively like a set of regulations that will govern it, and that will be in your MA. You can use standard forms. What you'll tend to find if you're doing a CIC registration, you have something in particular, and this is this thing called an asset lock. Again, curiosity, by the way, how many people here have come across that item or term asset lock before? Okay, now I'm just going to mention it for a couple of things here. So especially for the people who said no, never before. I'll give it, there's a link by that at the end, by the way. There are some videos, free resources and videos and articles I've written on these topics before. So again, if you want to dive deeper, then you're more than welcome to have a look at those articles. Now, here's the thing. If you're a funder wants to be convinced if they're using public money that the funds they're going to give to you are for the benefit of the organisation. Now, an asset lock is an element in your memorandum and articles. It's a section that says, by the way, something along the lines of, if for any reason the organisation is no longer here, then any assets that we've built up, which belongs to equipment, money in the bank, doesn't belong to the individuals who founded it, they will be passed on to another relevant organisation. An asset lock is also saying, if we do sell items in the organisation, assets, we're going to make sure we don't sell them at what's called undervalue. We make sure they're sold at the true market value, and therefore the funder is convinced, for example, that the assets within the CIC are for the benefit of your community and the benefit of the organisation. They're not for personal enrichment. Now, this is not me, by the way, making any judgment about the individual, but it's a neutral document. And now I would suggest, if you are a CIC already, I would recommend that you check your memorandum and articles. You can get those from Companies House or look at the original documents and check to see if you've got an asset lock in there. I've seen more and more funders, by the way, say, why haven't you got an asset lock? And if you haven't got one and you're looking to apply for funding, you need to get that adjusted and amended. Again, if you need any sort of assistance and advice on that, let me know afterwards. But I would suggest check your memorandum and articles and make sure there's an asset lock in there. If you aren't established, get the asset lock at the beginning. And what you're doing there is identify a similar suitable organisation that if you weren't around anymore, they would benefit from the assets. You transfer those assets to them accordingly. That's a bit of a safeguarding dimension. And as I said, CICs, unfortunately, at this moment in time, do not get any specific tax breaks. There's no, unfortunately, charities get things like relief from rates and from local taxes. There's no equivalent for a CIC, albeit that doesn't stop you applying to the local authority if you do work from a building to get rates relief, which you may get anyway. But that's a discretion as opposed to a mandatory element. Now, again, in the beginning, so this is really directed for those who have not got a CIC. There's a declaration. It's the official form is called a CIC 36. It wouldn't be a presentation without official terminology. Again, that's we said who the beneficiaries are, what activities you're going to be providing, and how they're going to benefit. Now, this picks up, I think it was, who's asking about directors earlier on? Yeah, Sarah. So this is a question that I think Sarah flagged up. So I don't know if she knew what I was going to put in the slide. Again, curiosity on my part, by the way, for those of you who've got CICs already, how many of you have got more than one director? So if you're a CIC already, if it's just you as a director, answer no. If you've got more than one director, including yourself, answer yes, please. Hopefully I haven't made that question too cumbersome. So if you're a CIC, answer the question, please. If you've only one director, put N. If you're more than one director, put Y. Excellent. Okay. Now, just something to think about going forward. There are two types of directors, really. There are what I call directors who are involved in the day-to-day decision-making of the organisation. So they may also act as authority in the bank account. They may be involved in hiring and firing, selection of suppliers. That's what I call operational directors. They are appointed, okay, and obviously those details updated at Companies House as well. Now, a NED is a non-executive director. So we're wearing a different hat. I sit on the board of a number of different organisations. Some organisations, for most of those, I'm what's called a non-executive director. In my own companies, I'm a director, but in other organisations that I volunteer for, I'm a non-executive director. What that means is I'm there to provide oversight. So I don't take part in the day-to-day decision-making. I don't take part in the operations of the organisations. I'm there just to provide some oversight, some accountability to the organisation there as well. So I can ask questions of the individuals who run the organisation. Now, if you're looking to appoint individuals to your board, but you don't necessarily want them to take part in the day-to-day decision-making, then you can make them non-executive directors. I would typically recommend that you issue a non-executive director agreement with them. But also, once you appoint a NED, they are still listed as directors at Companies House. So Companies House do not make that differentiation, but internally you can make that differentiation. And again, if you're going for funding, typically more funders then will typically require, rule of thumb, probably about 3 directors nowadays, because that gives them more what they call accountability, and therefore that makes them more comfortable when they provide those public funds. Again, reporting requirements at the end of each year, you've still got to submit your accounts and your tax return to HMRC. You still have to submit your accounts to Companies House, and also send the CIC 34 report as well. Now, just as a comment, by the way, there are 2 ways to submit your information to Companies House. You can do it online. And when I say online, by the way, don't expect anything magnificent. There's an online system of sorts at Companies House. You still have to do some manual input, by the way, so it's not perfect. But doing it online means you don't have to post it out. You don't have to make a trip to the post office. But if you do submit online, you have to submit your income and expenditure statement as well with it. If you prefer not to do that, the majority of my CIC clients prefer not to disclose that commercial activity, then you have to submit them through the post. You just submit what's called your balance sheet. You'll submit your filleted balance sheet with the CIC 34 report, and don't forget to send your payment with the £15 as well. If you're late, by the way, you will get fined. You will incur penalties. If you're more than a month late, the fine goes up from 150 to about £375. Don't quote me exactly, but that's the sort of figure that you get. All regulators work on the basis, if you get it on time, great, that's what you should be doing. If you're late, you get hit with a penalty and fines, which you do not want, because that will flag up to somebody who looks at these documents as something that's going on which doesn't look 100% correct. So that management responsibility is really, please don't take it as an erroneous responsibility, but it's a responsibility nevertheless. Now I'm just going to take a pause here at this stage. Just check, is everybody reasonably okay at speed at which we're going through, by the way, folks? Perfect. Excellent. Thank you, Mark. Thank you, Aisha. Now, what I'm going to do here, the latter part of the slides here, about another 5-10 minutes, okay? I just want to go through what I would share as a sort of business finance coach, what I would recommend to CICs and to organisations, generally speaking, how to become and maintain sustainability, how to prosper, how to grow, And these are some general, what I call housekeeping tips that I would recommend that you take on board. Now, if it's your organization, a lot of people don't necessarily appreciate that if it's your organization that you founded, you pay a key part in that organization, how mentally strain of a mental strain it can be, because you have not only responsibilities for your user group, your community, but there's the additional burdens of making sure that you meet stakeholders, making sure you look after your team, making sure that the money's in the bank to pay bills, making sure that the ambition is realized here. And it sometimes can get a bit of a drift, and it can be quite lonely and isolating if you're the founder that has all that responsibility placed on them. So I would always say, for me, driving an organization forward, make sure you've got a clarity on your why. You know, who is it you're serving? What is it looking to do? And that will serve as a good reference point, a focal point. So when you do have opportunities there, make sure they're within what you've set out to do, and make sure your efforts aren't too diluted and spread all over the place. Entrepreneurs, people who start CICs are very enthusiastic, lots of great ideas, which is wonderful. But what tends to happen is they try and divert their attention on too many fronts, and therefore they don't advance as much as they would like to. So 2 or 3 things are better than looking at, 25 things. Always think about the destination, and this helps you in your planning. So where you are today, you want to think about where you would like to be, describe it, articulate that, where you're likely to be in 12 months, where do you want to be in 12 months, and work backwards to figure out how you're going to get there. Other couple of things, make sure you've got a good positive relationship with money. So for example, if you're doing work for somebody, okay, make sure if it is a chargeable service, you thought about the fees, you thought about what you're going to charge, and you have that conversation at the beginning. It's a perfectly natural thing you should be doing. I'm not saying you're money motivated, by the way. And if somebody hasn't paid their bills, make sure you've got a system and you're comfortable having a system set up where you get paid on time as well. Far too many people I know that when they run organizations, the conversations about they're not getting paid on time, conversations about charging their worth become very difficult because it's not an easy topic to get to connection with here. And we don't want to think that we're just about money. We're not. But money you've got to be comfortable and have a positive relationship. A number focus, whether you're got a simple bookkeeping system or a complex one, as the founders and as the people running the organization, you need to know where you are financially against where you said you would be, and you need to monitor that, I would say, on at least once a week, headline figures that are coming in. So make sure you don't disconnect from the numbers and rely solely on your external providers, your accountants. You need some way to actually keep in touch with what's going on. Now, it's not the sexiest of topics. I would suggest, personally speaking, by the way, certainly in a digital format these days, is depending where you are, I would certainly think about systems that you've got in your organizations to make them work for you. And I would certainly say, when you look at your information, your bookkeeping systems, spreadsheets are fine, they can work. They become difficult, though, when it becomes, as your organization becomes more complex. If you need to give reports to funders, if you want to understand where your money's going, which projects are earning value, which ones are draining your resources, then a bookkeeping system will give you lots of good information coming out. My personal view is a digital system would always pay itself back in terms of time, energy, and effort. I've got a personal preference, which I'll mention if anyone's interested, but I would certainly say get your bookkeeping systems in-house straight away. Don't look at them as just compliance obligations. Oh, I've got to do this because I've got to keep records. Data gives you information. Information helps inform the direction that your organization is going and helps you monitor and review. So don't think of them as a needless task that you do once a year. I think they have a lot more, a bigger part to play apart from that. Now, making money. Yeah, that's a great question at FA. Now, from a personal viewpoint, there are lots of different systems out there. My personal viewpoint would be Xero. And now the reason I recommend Xero amongst anything else, pardon me, first of all, if you've got things like a website, you've got other applications going on, where you've got people paying for things. Xero is one of the most powerful ones of the marketplace that integrates with lots of apps. Secondly, depending on the version that you're using of Xero, okay, if you've outsourced that responsibility to somebody else, and you've set them up with the system, you may want to be tracking what you're spending against the different projects. Xero's got a good tracking system. It's got a good correction system as well, by the way. So if you do make a mistake, as we all do, then it's easier to correct that. It connects up with things like bank fees. The price points are quite positive. So yeah, my personal recommendation is Xero. The one that I would definitely personally speak, and it's a personal view, I would personally speaking avoid things like QuickBooks, because they can become very clunky and messy. I would avoid something like Sage, and a personal recommendation, because they can be quite expensive. So again, I'll hold my head above the parapet. I've got clients with different systems, but personal speaking, I know I'm labouring this point, with Xero would be my recommendation. Now, making money. I think there's no shame, by the way, and I think it's absolutely essential that if you're running a CIC or running any type of entity, remember your primary focus is obviously to deliver need. But before that, your primary focus and need, I know it sounds weird, is to make sure that your organization makes what I call a profit. Now, when I first entered the social enterprise space quite a long time ago, by the way, I know my skin doesn't suggest that I'm that old. And when I started working with charities and social enterprises, profit was a very dirty word. Now, we're not talking about what you do with that profit. We're talking about the making of it. If you do not make surpluses, if you do not cover your costs and a little bit more, your reserves will start to decline. It's costing you to deliver that services, and therefore your sustainability is going to be questioned. The difference for me for a social enterprise model and a CIC and a charity is the profits that you generate are there for you to continue delivering those services, for you to sustain a good solid reserve base, for you to be healthy, for you to make sure that your stakeholders are serviced, that your team are well rewarded, that yourself as the founder is also remunerated well for what you're doing. Now, we're not chasing the money. It's not about that, but you need to make sure that in your focal point, making a profit, making sure that you at least charge above the cost of providing that service, that's got to be factored in my opinion, from day one. If you don't, you run the risk of not being financially sustainable. And if you're not going to be here in a year's time, then think of all that community that you're not able to deliver benefits to. This is just a very general overview about 6 steps to making money. And when it says find a ravenous crowd, that's a bit glib. It says, who is the community? Who is the client group that you're looking to serve? Make sure you avoid the shotgun. Make sure you're a bit more focused about who they are. Create a captivating meal. Now, audiences, clients, customers, whatever term you prefer to gravitate towards, have all got problems that need solving. They all have got transitions they want to make. They're looking for help. So what is that help you're looking, what is that solution that you're offering to them? What is it you're connecting with them with? This is the difficult. How do you promote yourselves? How do you get them in front of your audiences? So having defined your audience, the community you're looking to serve, how do you get your solution? How do you get your transformation? How do you communicate them? Once you know who your audiences are, by the way, it's easy to identify where you should be promoting yourselves. Obviously, deliver great impact, so do a good job. And then it's the upsell. What else can you offer that audience? Yeah, no problem at all. I'm going to be on for about another 5 minutes, and then that will give us space to ask some questions. I should thank you for that prompt. So we've got about 15 minutes, folks. I'm about 5 minutes left on the slides, and then I'll make sure there's enough time to answer some great questions. And then build your crowd. And that's effective, that analogy. Hopefully you can see that, relate to that, and that's how you want to be building your organization. Now, again, critically, if you do nothing else, by the way, in terms of systems, the one minimum thing that you all need to have is you need to make sure you produce, at least I would suggest, a 12-month cash flow forecast looking ahead. Your organizations can make surpluses and profits, but they can still fail. Cash is the thing that will keep you going. Money in the bank, access to that cash, access to facilities will keep you going. you can survive the first year not making any money at all, profitability, but if you don't have cash, close the lights as you leave the building, you will not survive. And this is the nub of what you need to do. Now, if I was advising a CIC, coaching a CIC or an individual, I would say you need to create a story. So think about your destination, where you want to get to. What does that look like? Can you describe it? So is it like a particular community you want to work with? Is it like a number of workshops you want to deliver, training options, selling services, whatever it is? And work backwards to decide what that activity plan looks like. What's the activity plan that you need to do to get there? And that forms your budget, and it serves a number of different needs there as well. It helps you to plan, helps you to control what's going on, helps you decide. If you think, oh, well, I'm not big enough to be an organization with a budget, then that, for my opinion, doesn't matter how big you are, make sure you've got a financial plan, make sure you've got a budget that sits behind that. And here's how you go through, folks. So it's about thinking about your endpoint, the activity plan, like I'm going to be doing this level of activity promotion. I'm going to be delivering these workshops. I need to build up these networks. These how I take. Think of the activity first of all, make it detailed. Don't just say generally, I'm going to do social media or I'm going to build up a network. What does that actually look like? Translate that into money. What's the financial impact of that activity plan? And then break it down into regular months so you can monitor your progress and you can use that as your accountability story as well. KPIs, by the way, and then we'll come across that term before, KPIs. Okay, so that's my chat to back here, run the meeting. Great. Now, a KPI by that is just that. So for your organization, if you're thinking of, or I need to build up networks, think about how do you measure that progress? Is it based on the number of people that you connect to, have a conversation with, they're part of your social media group? Well, that's a KPI that you look at. If you're using your website to attract attention, to get people to sign up for something, make sure you look at your analytics and look at the number of people who click through. If you've got a mailing list, and as a rule of thumb, by the way, folks, mailing gives you 30% better return than most other forms of advertising. And if you don't have a mailing list at the moment, and you don't do any email marketing, I would strongly recommend that's something that you need to factor in to begin with. Email marketing, if it's done correctly, with the right conversations, will generate more benefit for you than a social media advert, a social media post, a Google ad will ever produce. You control it, you can dictate the messaging, and you can dictate what goes on there. So make sure you've got something that says, I'm successful because I'm looking at this, it's where I want it to be, and therefore that indicates a movement forward. Now, I'm not sure if anyone recognises the individuals in that diagram. Having a plan is great, but it's when it goes wrong, okay? Do we at least have some idea of contingencies? When we look to the future through the windscreen of our business, not the rear view mirror, we think this is what's going to happen. We don't want to think negatively, but we want to think about what can possibly go wrong. If this doesn't happen, what's our plan B? What should we do to mitigate that there as well? So think about just a scenario options. If you've got a board of directors, that should be part of your quarterly or bi-monthly meetup, or however often you meet up, is to discuss, review what's gone on before, look to the future, and then discuss how things are actually going to materialize and work out. And for those of you interested, there's my contact details at the back. On the I Hate Numbers website, by the way, there are a bunch of resources on there. I've got an equivalent I Hate Numbers book as well, by the way, and a YouTube channel and podcast, depending on how you like to consume content. And I'm just going to stop sharing now for a few minutes because I want to take a breath for a few moments. I know it's a bit of a whistle stop whether we had everybody, and I'm just going to be quiet for a few seconds. Any questions that we have, I'd love to hear what they might be.
Also, just definitely want to say thank you so much, Mahmoud. That was really informative. And I think even I picked up a few things as well, which was fantastic. And I hope everybody agrees as well with with what I've just said. And yeah, if there's any questions that you might have for Mahmoud, please do share it in the chat box, or you can, happy for you to unmute yourself or share on via video your question. Suleiman, let me, if you want to speak up, share your questions. Hang on.
Okay, I'm just going to pick up a question from Marwa. Yeah, sorry, Marwa, let me emphasize. Yeah, thank you very much for that. Now, there's no fine for submitting the actual CIC application. The fine comes in once you're registered. When it comes to submitting accounts to the regulator, like your final financial statements at the end of the year, that's when the fines come in. But there's no fine for the actual application submission.
Excellent. We have Suleiman as well. He's just on video.
Yeah, okay. Mark. So Suleiman,
sorry.
who goes first?
Suleiman is first for 1 second, because he's just been,
Suleiman, what's your questions, Lisa?
Well, the quick question is that you mentioned the operational directors and the non-executive directors. Can the directors, like charitable organizations, so like, for example, a limited company by guaranteed it's a totally different format, but can the directors of the CIC paid by the company itself?
Well, that's a good question, actually. So there's a whole mix. At the end of the day, if your articles allow them to, then the answer is yes. So always check the memorandum and articles of your organization, the articles of association, because there will be a provision in there to say what the policy is towards paying directors. Okay. The other thing that you've got to consider, so that's the first thing, that's the legal restriction. If it says you can't pay them, then you need to amend those articles. Secondly, you just need to decide as an organisation, if you are going to pay them, make sure there's transparency and make sure that's something that the rest of the organisation is comfortable with as well.
Thank you.
Yeah,
no problem.
Answer your questions, Laurent? That's good. We'll go over to Mark. Is it easy to change operation directors, say every year or biannually?
Yeah, well, the short answer is, Mark, yes, it is. You can do that. The only thing I would probably say is I'd do it cautiously. I'll be interested to know what would be your rationale for wanting to change them every year or biannually.
Mark, do you want to come on?
Yeah, sorry.
Yeah.
No problem. Hi, Mark. Yeah, fire away.
It's because it's a sporting community that I represent, and we vote for our committee every year. So there's a good chance that we'll be changing those operational directors on a regular basis.
Okay. Now, so Mark, thank you for that. So there's two things. First of all, in terms of procedures and process and legality, yes, you can. Number two, though, I personally speaking would caution against doing it every year or twice a year. The reason is as follows. If a funder or somebody looks at your organisation and they're seeing directors change quite regularly, and every year, by the way, or twice a year would be seen as quite regular, they might say, is there something going on internally, some culture that's quite bad, why directors are leaving so rapidly? So my rule of thumb would be directors are appointed for, say, on average, every 2 to 3 years. Okay, they retire, put themselves up for election. You may have a fixed term that says a director can't serve for more than 3 years. Obviously, if they do anything naughty, that's a different consideration. But my personal view would be I would not change them that regularly because it might send out the wrong signal, whether that's true or not in terms of what's going on. And I would normally have, as part of the induction pack, decide what you think is appropriate to appoint directors. And then you can either say a fixed term 3 years, that's it, or 6 years maximum, or whatever you decide is more appropriate.
Brilliant. Thank you very much.
No problem at all.
Is it recommended to have an annual report to describe what's happening in the accounts for CICs? Because I know that for Charity Commission, when it's always good to have an annual report, but with CICs, I don't see it often. So
good question. Here's what I would recommend, because you're going to be doing that review of activities in the CIC 34 report. I wouldn't necessarily reflect it in the financial statements. Yeah. So most financial statements that are prepared, depending whether it's a CIC that's regulated by shares or by guarantee, is not normal to put it in there. There's nothing to stop you doing in that, but it's not normal practice because most people would say, we're submitting a CIC 34 report, so the two together will give us the overall picture.
Right. Okay. That was really useful. If anybody else has any questions, happy for you to again just join us in the chat, whether it's on video or you can unmute yourself. Just let me know just by raising your hand, and then we can bring you into the conversation. In terms of, sort of it's very informative what you've said. And in terms of, sort of getting it done and getting it right, roughly how long should you really give yourself? Is there like a sort of, you couldn't really do this in 1 week, but with the support of even like yourself, or how long should a person really reflect on setting up the CIC?
Right. The first thing I would probably do before I commit myself to like investing in the costs and the energy in setting up a CIC and running it, is to have some idea, even if it's a 2-page A4 document, some idea of what I call your route map, your business plan. Now, 2 things. When people hear business plan, they think it's some boring, dusty document. It's 24 pages we've got to complete the funder. That's not what I'm saying. It is saying a business plan in my mind, and I've been on both sides of the fence of producing them as well as assessing them, is a living document that says, okay, where's your journey? Where do you want to go on a holiday, for example? I want to go here, right? How are you going to get there? What does that involve? And if you have some consideration about that organization and you can articulate it, you can see the challenge in front of you, and that helps you face it. If you know what that requires for you to get to that end point, and if you say, I don't actually know, I haven't got an end point, I'm just want to help people, that to me is too woolly, because what that means is you will never know whether you're achieving what you set out to achieve. You will never know if you've arrived at the place you want to arrive at. So I would say I'd spend about a period of time having a rough outline of what that plan looks like. It doesn't have to be detailed, but it says, that's why this is who I want to help. This is what I'm going to do. These are the resources that I require. This is what it's going to cost me, what I need to generate, blah, blah, blah. Do I have the appetite for that? Do I have good people I can access? If the answer is yes, then go for it.
Wow, that's excellent. And then my final question really is that what common mistakes and do you see people make when they are setting themselves up as a CIC, and especially when they're filling in the application form as well?
The big one on the application process itself, and Kefala, I'll come back to your question in a moment. On the actual application process itself, it's the first 2 questions about who the beneficiaries are, how they would benefit, i.e. the or defined area community. And the second thing is the activities. What activities are you planning to do, and how's that going to benefit? Most people are quite general. They say, we're going to hold workshops. If I'm reading that, I don't actually know how a workshop is going to benefit the community. What is it they're going to gain out of that? So that's the 2 big stumbling blocks on that. The process, by the way, is quite top heavy. It can be. So it's about, I think, don't quote me on the exact number of pages. It can be anything from a 24 to 30 page document. We do the formations on behalf of clients, by the way, I'll just flag that up. But that's the 2 questions that people trip up on, and they haven't thought it through clearly what they're going to do and how it's going to benefit. The other mistakes that are made, and this comes back to a question Kefala is asked in, if your financial accounts, that will be a cost officially recognised. Now, it's 2 questions. If you're doing now, there's nothing in legal terms, by that, unless you're a PLC, that says you cannot prepare the company accounts yourself and submit them. That's perfectly fine. Doing it yourself, if you've got no financial background, that's not to say you can't do that, but on average, you've got to bear in mind, Companies House will not check the accuracy of what you submit. So if you then have to prepare a set of accounts to send it on to a funder, and for any reason there are issues with that, things that you've done yourself, that might create a bit of a problem. But Kevin, your question is, do you have to do the financial report yourself? Legally speaking, you can do it yourself. What you've got to ask yourself is, if I get somebody who's A, experienced at doing CICs, B, who's a competent, qualified accountant who could submit those accounts on my behalf, I would certainly recommend you talk to at least 2 or 3 different people. You've got the peace of mind potentially it's being done independently. You've got that sanity check that they've gone through, done some degree of verification, and you've got some degree of independence that's being done. But in legal terms, you can do the report and everything yourself. And if you're comfortable with doing that, then by all means do that. But just beware of the trips that can happen with that.
Excellent. No, it's really good. It's 12 o'clock. Thank you so much, Mahmoud.
No problem.
It's gone so quickly. But here are the details for Mahmoud if you want to get in touch with him with any more questions. I put it in the chat box. It's clients@ihatenumbers.co.uk. And of course, we're going to be sharing the slides and the video. It may take a few days, but we'll get that over to you guys as soon as possible. You can always contact us as well at AWN, where we have a team who could also advise you as well in terms of other other organizations signposting our advice, our knowledge that we can share with you about your process as well. So hopefully that will complement each other. But thank you so much and have a good day and enjoy the weather.
Thank you very much. Thank you very much. Thank you for inviting me. Thank you everyone for your comments and your participation.
Thank you. Take care.
Take care.